A 13 Bankers, The Wall Street Takeover and the Next Financial Meltdown by Simon Johnson and James Kwak, provides an incisive analysis of the financial crisis of 2008, tracing its roots and implications while critiquing the profound influence of Wall Street on American politics and the economy. The authors, both economists with substantial credentials, argue that the crisis was not an unavoidable accident, but a result of the increasing political power and risk-taking behavior of major financial institutions. Key themes and arguments. 1. Historical context. The book opens by providing a historical overview of the American financial system, explaining how financial power has shifted over time. From the early 20th century's attempts to curb banking power through reforms, to the deregulatory trends of the late 20th century, the authors argue that the financial sector's influence has ebbed and flowed, often coinciding with major economic crises. 2. Rise of financial oligarchy. Johnson and Kwak detail how a small group of large banks, referred to as the G13 Bankers, came to dominate the American financial system. These banks leveraged their growing power to influence policy, pushing for deregulation and other policies that favored their interests. The repeal of the Glass-Steagall Act in 1999, which had separated commercial and investment banking, is cited as a pivotal moment that allowed banks to expand their activities and take on more risk. 3. Crisis of 2008. The authors analyze the 2008 financial crisis, attributing it to reckless risk-taking by the major banks, facilitated by inadequate regulation and excessive complexity in financial products. The crisis, they argue, was a direct result of the financial sector's unrestrained growth and power. They emphasize the role of financial innovation in creating complex and opaque financial products, such as mortgage-backed securities and credit default swaps, which amplified risk throughout the financial system. 4. Government response and bailouts. Johnson and Kwak are critical of the government's response to the crisis, particularly the bailouts that saved the large banks but did little to address the underlying issues or prevent future crises. They argue that the bailouts reinforce the problem of too big to fail, where large institutions are effectively guaranteed government support because their failure would be too catastrophic for the economy. 5. Financial regulation. The book calls for stronger financial regulation to prevent another crisis. The authors advocate for breaking up the largest banks to reduce their power and risk, reinstating Glass-Steagall-like separation between commercial and investment banking, and implementing stricter oversight of financial markets and products. They also suggest that political reforms are necessary to reduce the financial sector's influence over policymaking. This includes campaign finance reform and stricter lobbying rules to ensure that public policy is made in the interest of the broader economy, not just the financial elite. 6. Long-term implications. The authors warn that without significant reform, another financial crisis is inevitable. They stress that the concentration of financial power not only poses economic risks, but also undermines democracy by creating a system where financial institutions have outsized influence over government decisions. The book concludes with a call to action for policymakers, regulators, and the public to demand changes that will create a more stable and equitable financial system. Critical reception. G13 Bankers has been praised for its clear and compelling narrative, its thorough research, and its strong argument for financial reform. Critics have noted that the book provides a sobering look at the dangers of concentrated financial power and the urgent need for change to prevent future crises. Conclusion. G13 Bankers serves as both a historical account and a policy critique, highlighting the systemic risks posed by the concentration of financial power and the failure to adequately regulate the financial sector. It underscores the need for robust reforms to protect the economy and ensure that the financial system serves the broader public interest rather than just a small elite.